Hello and welcome to Accounting Tutorials. Today we're going to be looking at a very recent accounting paper. So this was written in September 2023 and it was paper 1, written within the Gauteng province. So if you are looking for these past papers, you can actually get them on this website here, so www.saexampapers.co.za. So they've got great resources there for you. So there's past papers, memos, as well as your answer books, which you can use to practice. So this was 2 hours long. And we start off with instructions. So please make sure you read your instructions beforehand and you understand what is required. So there's 4 questions here, and I'm going to be looking at question 1. Still be on the lookout for the rest of the questions. So I will post those in due course. So question 1, retain income note and statement of financial position. So this is 55 marks and it's 45 minutes long. So Tsatsi Limited supplies and installs different types of solar panels at a fixed price. Okay, so we know the business and what they do. So they install different types of solar panels. Okay, and the mention of a fixed price is also important because it means your selling price is fixed, okay, at whatever price that is. You're provided with information for the financial year ending 30th of June, 2023. Okay, so that is now the year end that we are working with, right? So highlight that. So let's see what is required. So they say refer to information B1. So there's B1. Okay, so that's information we should refer to. And 1.1 is to calculate the value of closing stock of solar panels, 5 marks. 1.2, use information in B2 and 3 to calculate the missing figures denoted by 1 to 3 in the fixed/tangible asset note, 12 marks. And 1.3, complete the retained income note. 1.4, complete the statement of financial position, balance sheet, on 30th of June 2023. When notes are not required, workings must be shown. Okay, so very important to always show your notes and how you got to the final answer, just to ensure you get all the marks. Right, so a question like this, what I would say is you need to have your own exam technique in terms of what works for you. My advice would be, to already start off setting up the structures that you know you're going to need. So for example, we're going to complete the retained income note. So we can already start off with, how that looks, in terms of your opening, retained earnings, balance. There's going to be profits coming through, and, whatever movement might be necessary for you to complete that, as well as your statement of financial position, so that you can set up already, assets and liabilities, and leave enough spaces for any additional line items that you might have missed. And the reason for that is to make sure that as you read the additional information provided, some amounts have already been given, so you can start populating that in your notes, because you don't want to get to a situation where you've now answered, let's say up to 1.3, and you only have 5 minutes left for this question. So if you have good exam technique, that will actually help you make sure that you are able to complete this question in the allocated time. All right, so let's see what information has been provided here. So we've got balances/totals on 30th of June 2023. So they've given us ordinary share capital, retained income, and there's a loan from Sheila Bank. Now, what is also interesting here is, so all your assets and liabilities are given the same signage. So in essence, you kind of have to use your own common sense here to understand whether something is an asset or liability, So something like a loan from Sheila Bank, actually loan Sheila Bank, it doesn't say from, you would have to assume it is a loan that's been provided to us because it is, coming from a bank. So as opposed to, us advancing money, which we're not in the business of lending money. So in essence, it makes sense to consider this as a liability. So that's just a point that I wanted to emphasize there. So items like fixed deposit, PNB Bank, so that will be an asset. So that's quite clear. All right, so there's also some information here that is not given. So fixed assets at carrying value, so the carrying amount is not provided. Inventory is also not provided, which links to question 1.1, where we need to calculate the closing value of the stock. Okay, and then bank, also not given, but we are told that it's a favorable balance. All right, so we can skip this for now because we know the information we need for 1.1 is actually sitting in B1. Okay, so 1.1 closing stock, which we need to calculate there. Okay, so additional information. Tsazi Limited sells solar panels at a standard rate of 10,500 per unit. So my selling price is 10,500, and we told that this is at a standard rate. So again, the selling price does not change. So it will remain 10,500 across. So a markup of 25% on cost is applied. Okay, so if I'm applying a 25% markup, that will mean to calculate my cost price, essentially that'll be 100 of the 125, because 125 being the cost plus the 25% markup. So 8,400 is then my cost price. And just to also check that I'm correct, so if I take my cost times 100% plus this 25% there, I should get back to 10,500. Okay, so I'm happy that the cost is correct. Specific identification method is used to value the solar panels. So what does that mean? So that means each item of inventory is tracked in terms of the cost. So from when you first purchased it, you know what the cost is up until the point that you sell it. You know what the specific cost of that item is because you're applying the specific identification method. So this is as opposed to the weighted average method, wherein the cost of each item that you sell is calculated on a weighted average basis. So what you would do in that case is you will say, what is my total cost of inventory? How many units do I have in stock? Then you divide the total cost by the units, gives you an average, and that is what you apply to calculate the cost. Right. So we are using specific identification, so we don't need to worry about that. The information relating to solar panels is as follows. Okay, so they've provided us with additional information there. So opening stock. All right, so this is units, unit price, and total. So we know we have 78 in opening stock in terms of units. Purchases 631 and closing stock. So that is not given. You're going to have to calculate this. And then lastly is units sold, which is 602. Okay, and they've also given us the unit price, which we already know from the first point of this additional information, so 10,500. So that means my total value is my units times the unit price. Okay. So looking at this question here, so you'll see, so there's gray blocks and a block with a question mark, which is what we need to calculate. So the gray blocks is implying this is what is not needed for this question. So you do not need to worry about finding the values for this. And also remember, this would be a bit difficult because the company uses specific identification method for their inventory. So you would need to know for these purchases, for example, that were bought during the year. So the dates when they were bought and what the cost at that point in time was. And that's information that is not given. So hence, you do not need to worry about the gray blocks. So we can move on. Okay, so we need to calculate the closing stock. Now, we've been given the units. So from what we've been given, we can actually calculate closing units in stock. So that'll be my opening and what I bought during the year. Then I need to take out what I've sold. So 107 is the units that I have in stock. Now, the unit price for this is also what we've calculated here above, because we know the company uses a 25% markup on cost. So my cost is then 8,400, and my total value is calculated as the 107 times 8,400. So 898,800 is my closing stock value. So that answers question 1. Right, so we're done with that. Now let's move on to 1.2. So use information in B2 and 3 to calculate the missing figures denoted by 1 to 3 in the fixed/tangible asset note. Okay, and this is for 12 marks. Right, so use information in B, so that's B up there, and 2 and 3. Okay, and we're going to use that information to calculate 1, 2, and 3. All right, in this fixed/tangible asset note. All right, so already given us the note here. So some information has been given and some information we're going to have to work out. Okay, so let's continue reading on. So details of fixed assets, land and buildings. The company also owns property, is what they tell us. So that's important because they're saying in addition to equipment and vehicles, there is other tangible assets, which is property. And this will become important when we look at question 1.4, which is the statement of financial position. Because if you remember this table here, fixed assets at carrying value, this was not given. So that tells me that this is made up of your equipment and vehicles as well as property. So you're going to have to calculate what the value of that property is. Okay, so equipment, new equipment was purchased on 31st of December 2022. This transaction has been recorded correctly. Okay, so looking at equipment, so additions, they already provided us with additions, 55,000. And we now know that this was bought 31st of December 2022, which means for the financial year ending 30th of June 2023, there's 6 months worth of depreciation we need to calculate for this new equipment. Okay, and the transaction was recorded correctly. Again, that's telling you that the numbers that you see have already taken this additions into account. So this cost price, for example, already includes the additions or the new equipment that was bought. Right, depreciation is calculated at 10% per annum on cost. So 10% per annum is again similar to saying the useful life is 10 years. Okay, so you can use 10 years or you can use the 10%. Okay, and then the next part relates to vehicles, but we already have enough information for equipment, so maybe we can start off with that before moving on to vehicles. Okay, so we know we're going to need to calculate the depreciation, which is what the question entails. So this is part of number 2 there. So to calculate this, you need to remember, so there is equipment that we had at the beginning of the year, right? So that equipment depreciation will be calculated for using the full 12 months. because it's been available for the full year, okay? And we know that because there were also no disposals for equipment. So we can start off with that. So if I take my cost and I divide by 10, and 10 because depreciation rate is 10% per annum on cost. Okay, so signage is going to just make that a negative. So 56,100 is my depreciation for the year. However, looking at the carrying amount at the beginning of the year, it doesn't make sense that my depreciation is now more, right? So I can't have more depreciation than what I have as a carrying amount, because you're going to be sitting with a negative carrying value. So we don't want that. Depreciation should be limited to what is actually available as the cost. So I need to then ensure my depreciation is not higher than what's available. And there is a rule in accounting that if your asset is fully depreciated, you at least need to show it at a value of R1 in your books. Okay, so those are assets that are, so you've depreciated them fully, but you're still using them. Okay, so you need to reflect them at a value, and that value is R1. Right. So let's do that. So we know that 6,100 is the excess. So I need to then include the 6,100. So 6,100. So that gives me 50,000. But remember, I need to still reflect my equipment at a value, and that value is R1. So I'm going to also say minus R1. So 49,999 is then my depreciation, and that will leave us with a carrying amount of R1. Okay, so happy with that. So that is just the opening stock. So I need to also now include depreciation for this, sorry, not stock, equipment. I need to now also add in depreciation for equipment that I bought halfway through the year. All right, so to do that, I then need to take into account, so this is the 55,000 cost. We use a depreciation rate of 10% per annum, which I said it's similar to a useful life of 10 years. So this I need to depreciate for 6 months because we only had it for 6 months during the year. Okay, so then that gives me my depreciation of 52,749 for the year. Okay, so that answers this question here. So now we still have gray blocks here, which again, for this specific question, we don't need to worry about. But because remember, the question asked you for a balance sheet, and you're going to need the closing carrying amounts to compile that. So I'm just going to continue with that and complete the gray blocks as well, even though it's not necessarily required for this question. Okay, so the closing accumulated depreciation for equipment, I know will be made up of my opening accumulated depreciation plus my accumulated depreciation for the year, which is there. Okay, and then my closing carrying amount is then 52,251. Okay, so that we're done with equipment. So let's read on and see what we've been provided for vehicles. So a vehicle was sold for cash on 31st of March 2023. Now, this mention of cash is also important, so maybe just highlight that because as you remember, one of the items that were not provided to us was the bank balance. So I will just make a note of that for now. Now we know when this vehicle was sold. It was on the 31st of March 2023, okay, which would mean we need to calculate depreciation for this vehicle for the 9 months that we had it during the year. So from 1st of July up until 31st of March. And we've been told it was recorded correctly in the records of the business, right? So looking at the information that was provided, So we had depreciation, so depreciation is already there. Because it's been recorded correctly, then you can assume that the 9 months depreciation is already included in this 98,890 balance. And then also this cost price takes into account the disposal that happened. So this is the cost price after you've now made the disposal. Okay, so what else has been given? So the details of the disposal of the vehicle according to the fixed asset register as follows, right? So there's details that's been provided there for us. So cost price is not given. So we're going to calculate that. Accumulated depreciation 1 July 2022 is 66,000. Depreciation is 20%. We're told that this is on diminishing balance method, okay? So diminishing balance method essentially means that each year your depreciation reduces. And the reason is because you're calculating depreciation on the carrying amount, so not the cost. So that's why it says diminishing balance method. This is as opposed to straight line method, wherein your depreciation each year is fixed because it's calculated on the cost. All right, so that's the difference. Okay, so they've also given us the profit on sale, which is 3,350. Okay, so what else? So there's a note. Depreciation on all vehicles was accurately calculated at 98,890 for the financial year. So again, reiterating the point they made at the beginning that this was recorded correctly. Okay, so we've got some information and we can use that to calculate what is missing. So let's start off with what we know. So we know the cost price at the beginning of the year is 814,000 and at the end 649. And we know the only movement that would have happened is the disposal of the vehicle on the 31st of March, because that's the only item we are aware of. So that would then mean to calculate my cost price, I can simply just say my beginning cost and my ending cost. So 165,000 becomes the cost price for the vehicle that was sold. Okay. Now, we can also actually work out the accumulated depreciation at the beginning of the year because we know what the cost and carrying amount is. So this will simply be a balancing figure. So if I take my carrying amount minus my cost price, that gives me my accumulated depreciation of 294,800. And remember, so this is part of 1. So I've already answered that question. Okay, and I now need to work out what my disposal at carrying value is. So I need to find the carrying amount of this vehicle that was sold. Right, so I have the cost and the accumulated depreciation at the beginning of the year. So let me work out what was my carrying amount on 1 July 2022. So I would say cost minus the accumulated depreciation. So 99,000 was the carrying amount. Now depreciation is at a 20% diminishing balance method. So what is then my depreciation for the year? Not for the year, sorry. So this is depreciation for the period that I still had the vehicle in the financial year, which is 9 months. So up until 31st of March, 2023. So diminishing balance is then the carrying amount times the 20% depreciation rate. And I had it for 9 months of 12. So my depreciation is then 14,850 for the 9 months. Right, so having this, I can now calculate what is the carrying amount the day before it was sold. So this is the 1st of March, 2023. And to work that out, it's the carrying amount, the beginning minus the depreciation for the 9 months, gives me 84,150. So this is my carrying amount at that point in time. So I can then put this here as my disposal at carrying value. Okay, so 84,150. And that answers this question. So we now know 1, 2, and 3. So we have the values for that. But as I've mentioned, so because there's a portion that requires you to work out the balance sheet, you're going to need these closing carrying amounts here. So let's work out what the carrying amount would be for accumulated depreciation. So now there's a very important principle here in calculating this closing carrying amount. So what I would do is I would take into account what is my opening accumulated depreciation, right? Then I would add on to that depreciation for the year, okay? But now remember, included in this opening accumulated depreciation is accumulated depreciation for the vehicle that we've sold, which we know is 66,000. So we need to remove that. And to remove it, we just simply add it, okay? Because that's a negative, so that will take it out, right? And then secondly, now included in this depreciation is this 14,850, which is depreciation for the 9 months on the vehicle that we've sold. And that also needs to be taken out, right? And the reason for that is we're trying to work out the accumulated depreciation at the end of the year, and that will exclude everything else that we've sold. Okay, so I need to add that back. Okay, so that gives me 312,840. So bringing my closing balance for vehicles to 336,160. And just to double check that my numbers are correct. So if I take my opening carrying amount and I deduct my disposals and my depreciation, so 336,160. Okay, so then I'm happy with the closing carrying amount for vehicles. All right, so that answers question 1.2.